Hi, everybody. Hey, hope you guys are having a great day. Hey, I wanted to do a couple things today. I wanted to go through my chart setup. I've been posting my daily recaps. I've been posting a weekly recap. I'm going to begin to post the individual trade setups. But before I do that, I wanted to go through what are you seeing on my chart? I've had a couple of comments that there's a lot going on, and there is. I'll admit that. But when you break it down, it all kind of helps to tell the story of what the market's trying to do and to give you a good read as to how well it might be accomplishing its objective. Okay, so the first thing I like to talk about is these candles on my screen. Okay, this is a Renko bar with a cool difference. This is a I trade ES, and so this is a 4-tick continuation with an 8-tick reversal Renko bar. Renko means we don't have any time has no impact on our chart. And so some of these candles might have taken three or 4 minutes to be able to draw themselves. Others might have taken 3 or 4 seconds. It also gives you a good feel for how fast the market is moving. We use a 4-tick Renko bar inside of ES because 4 ticks equals 1 point. And by the way, I did not create any of this stuff. Steve Myers and Rob Mitchell of Indicator Smart, they created it. Rob created it. Steve really taught it to us. He's the one who developed the strategies behind it all. So go to indicatorsmart.com if you want to see more about this. I'm just a person who's used it to become a successful day trader with it. So first thing I like to talk about, now that you understand, okay, we're looking at a Renko bar, 4 up, 8 to reverse. The first thing I would like to bring your attention to is this thing called a structure reference. When Steve invented the structure reference last summer, it was kind of my aha moment for trading. Okay, I was a struggling middling trader, could not really find consistent profitability. But when he began to show everybody how to draw the structure reference lines in order to cut the market in half and only take longs when we were above, when market structure was moving higher, and then only take shorts when market structure was moving lower. And then they came out with this cool indicator that actually painted the background green and painted the background red to indicate which direction you should be trading. It helped me a lot. It cut the market in half, allowed me to get a level of focus. I'll explain kind of how it works, okay? The tool is drawing these structure reference lines. I'll explain that in a second. But each time that price advances 2 bars past the structure reference line, it says, okay, we've now broken the last structure. And now we're going to go in the other direction. So 2-bar continuation up says, okay, we now broke the short structure, and now we'll be looking for longs. Each time that there's a reversal bar plus 2 candles, you'll see that the structure reference or the support line also transitions and moves up. Reversal bar plus 2 moves the structure reference line up. Reversal bar plus 2 moves the structure reference. Reversal bar plus 2, you kind of get it. And then once again on the other side, once we break that support line or that structure reference line by 2 continuation bars, our background color changes. And now all of a sudden, hey, we're now no longer looking for longs at this point. We're now looking for shorts, okay? Very important concept. So structure reference lines, continuation bars plus 2, they change red and green throughout the course of the day. And I pretty much am only going to take a trade in the direction of structure all the time. It's been a game changer for me. Okay. So that's the upper part of my screen. There's also a smart price band in here that's changing. You can see it changes from a cyan color to a red color to indicate a little bit faster direction what's happening. A lot of my trades, however, are just indicating a pullback with structure. So I use the smart price band really is just as an additional reference point for me. Okay. So now we'll kind of change our attention down to the bottom section. Okay. And the first thing that we'll look at is this thing called a smart momentum. Okay. So this is a momentum indicator. And what we use it for in order to help us tell more of a story about what's happening. Momentum to me is not so much the speed of the market or anything like that. I think that might have something to do if we were using some type of a time construct for the candles. But since we're using a 4x8 Renko bar construct, it really gives us a feel for 2 things: market expansion. okay? And then it tells us these things called T2 divergences. I'm going to talk about each one of those in succession here. So market expansion. Steve will say all the time that his winning concept is he takes discounted entries into expanding markets, okay? So how can you identify when a market's expanding? Well, what you can look at is you can see as these dots, as these inflection points in the momentum, as they begin to spread out, the market is expanding, and it gets much easier to trade than when all these dots are really close together and it's going up and down and up and down. That's difficult to find entries that are going to be runners inside of. But when the market begins to expand and it's slow, and these dots begin to slow down and the momentum begins to be more lengthy, the momentum runs begin to be more lengthy, the market is much easier to trade. And so I'm typically not so much looking for market expansion as I am looking for market contractions by these dots being also close together. And I'll just say, okay, I need to take a time out and not trade for a few minutes and let this consolidation zone kind of shake out of here. So that's one thing. The second thing we're looking for here are these T2, okay? A T2 divergence, and it's called a type 2 divergent. It's kind of how Rob Mitchell made his first fortune by being the world's largest ES trader. But the type 2 divergences, type 1, when you look at indicators, typically mean that the indicator is going to be ahead of price. Okay, that's typically what a divergence means when you look at indicators versus price reflections. But here, what we're looking for is almost kind of a rubber band type of concept. Okay, so if you begin to put this together, my background's red right here, right? And so I'm looking for what we call a type 2 divergence, where price is not able to keep up with momentum, where momentum can snap back farther like a rubber band would, okay? But price is going to be at a lower point in time. So price is lower, the momentum indicator has come back farther, giving us a little bit of a push to then continue the trend as it begins to move forward. So we look for type 2 divergences to indicate trend continuation. And it's just a great way to understand, yeah, this is what the market is trying to do. And you can get a good feel if it continues to make, in this case, lower lows, that it's doing a good job of it. So the type 2 is a part of a couple of the signals that I'll use on a regular basis. And so I wanted to explain when I use that term T2, that's typically what I'm meaning, okay? That there's a momentum opportunity in our favor for price to continue downstream, okay? High probability of trend continuation, and we use this to increase probabilities by combining it with structure and some other terms that I'll use in the next section called rockets and then needle bar conformation, okay? So that's how we use the momentum indicator. Two things, market expansion and T2 divergences. I'll now kind of scroll forward a little bit farther, and I wanted to find this area here. Okay, so the other thing, we believe we're taking discounted entries into expanding markets, but kind of the cornerstone of this entire strategy is that we have to believe that order flow leads price. And if you don't believe that, well, kind of go look at my trade setups for a course of a week. And if you think the market's random, I think it is random a lot of the times, but then certain times it's not random. Okay, and that's when we trade, is when it's setting up repeating patterns that we're able to test over time, and we're using these order flow tools to kind of say, yep, this is what we expect to happen, and the vast majority of time it actually does happen. Okay, so order flow leads price. So this is one of the few indicators where we will get a signal using the trap trader oscillator, this middle portion that I'll talk about now. Okay. And it's one of the few tools that I've ever seen that actually lead price. Okay, so when we get certain signals on this, we have a high probability that price is going to follow in our direction. I've explained structure. My background's green. We're only looking for longs on this particular screen here. Then the next thing we're looking for is a concept called trapped traders. Okay, trapped traders are simply, hey, there's a bunch of people trying to move the market in a certain direction. But when we get a signal that says, boy, there's a lot of order flow moving in the opposite direction, these people are about to be trapped. And the example that I would give is what I wrote on the screen. So if I'm a seller in a market and price begins to go against me, I'm going to exit that position by typically entering what's called a stop order. A stop order is a market order in almost all the cases. Very few people use limit orders as stop orders because you want to make sure that you can get out and not have it jump over the top of you. So they use market orders. Market orders advance price. And so when we find people, when we get an indication that there's a bunch of people who are heading one direction and suddenly the market begins to go the opposite, they are going to naturally undo their position so they don't lose money in the process. And as they do, they'll do that using market orders, which will propel our entry in the direction that we're looking for it to go. It's a wonderful way, as I describe it, to get up 6-8 ticks rather quickly and then allow you to manage a winning trade, which is a lot more comfortable than working from behind all the time. Okay, so we're looking for trap traders. An example would be this. So my background structure is green. For some reason, people said, hey, you know what? We're going to take it the opposite direction. We're looking at a few things inside of the trap trader oscillator. This white dotted line is the midpoint line. That becomes really important. But just suffice to say that when people are selling, these things called pressure bars are all showing red, red, red. And you can get a degree to which the tool is telling us that how rapidly they're selling or how strong they're in a selling position by how far down these pressure bars go. And so when you look at these candles moving downward, you can see that the order flow is saying, yep, there are people selling, 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 selling. And then we get down to a structure reference point, and you can see right here that, well, at this point, the trap trader oscillator is way, way, way oversold or out of value. So to go back to Steve's line, I'm looking for a discounted entry. Okay, a lot of people have now oversold their condition. So the trap trader oscillator has pushed itself beyond the oversold limit, which is at the 20% level of the oscillator. And then it begins to force its way up. It doesn't make it past the 50% line, but then it comes down, does the little retest. And then this line right here shows, wow, it went all the way across the 50, all the way through here, and indicating there's strong buying on this particular candle. What this also visually shows is that the people who sold all of this selling are now trapped by the market telling us, boy, there's a lot of order flow coming in to give us a strong order flow long read. Let's take that. And then as I said, order flow leads price. I get an order flow read right here. All these people are trapped. They need to undo their positions and the market begins to go back up. So that's kind of the cornerstone of what we're looking to do. The trap trader oscillator is a leading indicator. It identifies areas of the market where people have been buying and selling and are trapped. The delta pressure bars, okay, the over under value lines, the 80 and 20 line, the midpoint, and the TTO dots are all giving us really good information to identify where people might be trapped. We use this term, we use a couple of additional terms called rockets and lead outs, okay? A rocket is where the pressure is so significant going down that it exceeds the TTO level, okay? And it looks like a rocket. If you look at this particular bar right here, you have that red plume underneath the yellow dot. That looks like a rocket, right? It's a rocket going up in the air. Rockets can also be used for shorts, where if there's a green plume above a red line, above a red dot, that's also indicating there's more people buying than the oscillator is giving them credit for at that point. And so we're looking for rockets, and then we're looking for this other tool called a lead out. A lead out is where we get these lines that go horizontally, okay? And when the TTO lines break them, that's usually the indication of the trap trader concept, okay? So the lead outs are a key thing for us to say, yep, this is something that we now want to sit up and take attention to. So I'm looking at the midpoint lines, I'm looking at overbought, oversold, or out of value conditions. I'm looking at the TTO dots, and I'm looking at the lead outs and the rockets to say, boy, these are good conditions. So that the language that I'm using as I describe the trades, use those very terms. I have a rocket, I have a lead out, I'm going to do the midpoint line, my structure reference is green, this is a long entry for me. Okay, so you'll hear that same language again and again as I'm describing the trades. The bottom panel okay, is describing for us a little different concept, okay, where Rob invented this tool called a smart dynamic zone, where it has the advantage of grouping together a series of candles and then drawing up a support and resistance levels for the order flow reads that are currently occurring inside of the oscillator. So as a way of getting a confirmation that yes, this is truly a strong order flow read, we're typically looking for what we call a needle bar confirmation. And so the TTO dots are reflected a little bit differently through here. I'll expand this a little bit so you can see a little bit better. But what we're looking for is these areas where when it goes TTO dot to TTO dot, it draws what a needle bar. So you can very visually see it going from one side of the support and resistance levels to the other side. And so for that long that I got right there, which I showed before, we had a needle bar confirmation when the TTO dots went through both sides. It went through both the resistance, the support and the resistance side of it to say, you know what, there's nothing but clear sailing ahead. And so that also works a high percentage of the time just to help a trade get started in our favor to allow us to work it out. So this third level that we're using is pretty much only for confirmations from the way I trade it. I'm looking for what you call a jump defense or a needle bar confirmation. There'll be a couple others in here as well. Right here, needle bar confirmation showing on that up candle. Needle bar confirmation right there, okay, on this candle, boom, was below and now it's above, okay? So those correlate with typically very good order flow reads, okay? So I'll go over what the setups are in the next couple of videos, but here's a rocket, here's a double lead out that we're seeing with a needle bar confirmation. Based on everything that I'm trading, I need to be long right there to be able to get into this entry, okay? Because it's showing there are trap traders. Look at all the people who are trying to sell. I got my leader was in an oversold situation. So I'm moving from a position where I'm getting in at a discounted entry with trap traders. With my green structure, I need to be long. So that's kind of how I look at everything all together. Each little component on the screen tells a different story, and each is used to be in sync with the other. Okay, so when everything aligns, it gives me typically very strong assuredness that I've got an entry that's a qualified entry that allows me to rest a lot easier when I take a trade. Okay. Hey, so I just threw a lot at you. Apologize for that. Read the text on the page if you want to. Leave some questions in the comments if you want to. Go to indicatorsmart.com. I'm not affiliated with those guys, but they do a great job of explaining it. The YouTube channel for Indicator Smart also has a lot of really good information about how these tools are used with the trade setups. Rob and Steve are continually coming up with additional trade setups. I've kind of honed myself in on only really about 3 of them. So, and that allows me to reach my daily goals. So that's the way that I'm trading using them. Have any questions, leave a comment. I'll be glad to get back with you. Hey, thanks so much. Hope you guys have a great day.